Welcome back. I have with me two economists. Introduce them. Colin Garrow from Lesetja Securities and Alex Smith from FNB. Welcome, gentlemen.
Good, sir. Thanks.
Colin, let's start with you. We breathed a huge sigh of relief.
Huge.
You finished there.
I've got a bomb.
First he read the obituary, then it sounded like he was going to hike.
Yeah.
Take us through the motions of the speech.
It's about inflation, clearly. He set the background against a very weak economy, local economy that is, a very uncertain global economy. But eventually there's no escaping the inflation outlook. And I think what he's really said to us right now is we're pausing, but expect rates to move higher. He's bumped up the CPI outlook for next year. It peaks at 6.7% in Q1 and reaches a target again in Q4, according to the statement. So for me, that's key. You know, he's flagging some expectation that interest rates are moving higher. Also, inflation expectations are referred to it a couple of times, not just the forecast released by the Bureau of Economic Research, but also critically important, the difference between a 10-year bond, government bond, and inflation-linked government bond. That level, that difference is way in excess of the upper end of the inflation target.
Explain that dynamic to us, please, for our viewers. Why is that important that we should look at those two yields?
The inflation-linked bond is telling us where the outlook generally is going to be in a much longer-term environment. Where
so the higher its yield goes, the higher inflation is expected.
Pretty much that, exactly that, in fact. But one's got to measure it also against where a more ordinary vanilla-type bond trades of the similar maturity, 10-year maturity, is probably the best way of measuring it. And that difference between those two types of bonds comes in at approximately 6.7%. Now, the upper end of the target is 6.0%. And I think that difference, in my mind, is telling me expect rates to move higher. The Reserve Bank would respond to the expectations, expectations that the rand weakness is still feeding through the pipeline, is still going to be hitting the measured and official stats that we get, and that we did see, in fact, released by Stats SA today. So that trend higher would lead our interest rates higher. I think it's a question of determining really when. Not now. We've got another meeting in November. Maybe we're lucky then. Maybe we'd have to wait for the US Federal Reserve to make their move in December to see what impact it's got, you know, on the market overall. But I think, Gunther, there's, you know, the rand is playing a big part in the decision making on the MPC.
Let's move on with that. Alex, I suppose that's the main reason we're having inflation, is the rand.
Yeah, well, there's a couple of factors at play with regards to inflation. As the governor pointed out, we're not seeing a lot of demand-driven inflation in the economy. So what's driving inflation is actually supply-side factors. The rand is one of those factors. So we're seeing a weak rand pushing up the cost of imported goods. But there's also other supply-side factors, particularly administered costs. Think about electricity prices. We got a very substantial increase in electricity prices in July of this year. Other municipal prices are also very high. So the SARB has got a very challenging outlook on their hands, because this isn't your typical inflationary cycle where you see the economy overheating, lots of credit growth, consumer demand in place, and then the SARB hikes interest rates to try and dampen that demand and bring inflation down. No, inflation is being driven largely by the weak exchange rate and by a lot of administered prices. And those are things that are much more difficult for monetary policy to deal with. Ultimately, it's much better to try and deal with those things through what we call supply-side reforms. So, for example, if we could improve the efficiency with which Eskom is currently operating, we wouldn't need to see such big electricity tariff increases, and that could actually bring inflation down. Also, if we could reduce the trade deficit, the rand would probably be under less pressure, and that would also bring inflation down in the medium term.
I think some people would still say, but we haven't seen prices gone up dramatically yet. And the rest of the world looks like it's actually in deflation.
Yeah,
or call it disinflation, rather. So
Yeah.
how are we getting these things into our borders?
Yeah, I think it is I think especially in the US, we've seen now that decision last week was based on inflation being too low. Janet Yellen is looking for some form of wage inflation to come through from a stronger job
We don't
market.
have a problem with that, do we?
No, we don't. No, in fact, you could argue in this particular case that wage inflation is maybe one of those factors that the Reserve Bank would consider in a very negative light when it comes to making a decision on interest rates. But I think a very important thing is coming through more and more, and that is, although the governor is referring to data dependency on making decisions, it's more rand dependency. The rand volatility. I think if the rand for today, for example, had been sitting in excess of 14 rand to the US dollar, the decision to hike rates would have been a serious one on the cards. So, and I think that threat hasn't gone away in the sense of what the US is doing, to its interest rates and where the carry trade is going and the impact it has on us.
Alex, you did speak quite at length about the rand's exchange rate and made sure that we know that they don't know what to really make of it because they can't be sure if the Fed effect has been priced in.
Yeah.
Do you think it has been?
I think to some extent it has, but I don't think it's been fully priced in just yet. It's quite difficult to disentangle all the effects on the rand at this stage because we've got low commodity prices, we've got concerns about China's economic growth, and those are both weighing on the rand. And then we've also got the domestic issues that are weighing on the rand as well. Slow growth locally, relatively high inflation. So those are factors that investors are concerned about too. So I do think that once the Fed eventually does hike interest rates, we could see another bout of rand weakness. And bear in mind that since the last meeting, the rand has weakened by about 9% on a trade-weighted basis, which is quite a substantial bout of weakness for a 2-month period in which the Fed didn't hike interest rates. So I think that's really playing on the SAB's mind as well, is that we could see more, as Colin points out, and we could then be in a situation where the Fed is forced to hike, not just like what we saw in January 2014, when we got that 50 basis point interest rate increase that sort of surprised the market, but it was basically due to a miniature EM type crisis, emerging markets crisis, that resulted in significant currency weakness in a short space of time. So we can't write off an episode like that happening again, because the fact of the matter is that the US hasn't hiked interest rates in 9 years. So we really don't know what a US interest rate hike will do to the markets. We'll have to wait and see on that before we can conclusively say whether the rand has priced that in or not.
And 2 meetings ago, we hiked by 0.25. And there was already speculation then that it was to try and protect the rand, but I suppose they've given that up now.
I don't think so. I think there's a pause I think that pause is really coming from what the US Federal Reserve did last week. It's given the markets time to assess and maybe just adjust to the expectation that rates may well move up. Because I think December is certainly on the cards. I think it's more on the cards now than it's ever been before, a US rate hike. So markets like ours, emerging markets, high-yielding carry trade markets like ours, can now start repositioning themselves. And I think what really happened was the decision last week is maybe for some position adjustment by the speculators in the market. They turned their positions around because they know now they've got time between now and December to maybe just do nothing and then swing it the other way. But I think something really interesting came out of, if I may just look at it.
Colin, can I ask you to tell us about that after the break, please? We've got to do the usual housekeeping. Let's take a break and then Colin will enlighten us some more after that.